Hey guys, how's it going? I'm Nick, and in this video we're going over, should you be buying a house in 2020, because that's a huge question, or should you be selling it all? We're going to be widely looking at a bunch of different factors, from why you might want to buy a house to the interest rates right now, the real estate cycle and everything like that. And at the very end, there is a huge secret that I personally was looking around at properties and I heard from a realtor about this idea that a normal person doesn't really know. Now, this is a huge question right now because we're in a recession right now. Unemployment is high. People are still struggling in more factors than one. GDP is negative. So with all these things, people might be like, hey, should I buy now? And that's why I put first, you have to understand why you're actually buying a house. Is it based on just emotion and you just want to buy it for the heck of it? Because that might not be the best case. I remember working with a girl years ago and she just wanted to buy a house, had $4,000, and she was just starting to look around. That might not be the best way to go about it. Now, if you're thinking long term, maybe more of an investment and you're willing to hold on to it, then it might be a good way to continue further to see if you should be buying. But that's the first warning sign. A house should not be focused on as an investment. Learned by Rich Dad Poor Dad, Robert Kiyosaki. If you don't know anything about that book, definitely look into it. And people learned this lesson in 2006, 2007. They're like, oh, my house is an investment. If it goes up, I make money. Well, what happened in 08, 09? It actually continued until 2012, and it continued dropping. Your house drops. Then what do? So it's not an investment. An investment pays you money. In fact, holding a house, you're actually losing money. Hopefully you could break even because of all of the taxes you're going to be paying, the interest on the loan that you're going to be paying. So you're actually paying more than you think toward a house. So it's not an investment. Investment pays you. If anything, it's like a speculation. Yes, it can go up, but that's just hoping. So if you have a long-term mindset in mind, then you can continue looking into if this is a great idea, which we could then move into interest rates. Interest rates are at all-time lows. The Fed funds just dropped to 0, which is kind of a basis for mortgage rates. And mortgage rates you could get around, I think, like as low as 3% maybe, depending on where you go, but they are at all-time lows. Now, there are two things with this, something very good and something very bad. So the good is that since rates are low, that means you're paying less to borrow. So that's great because, normally if interest rates are higher, then you're going to have a higher payment. Fairly simple, right? The issue with this, now we got to look at the bad side, is that everyone is thinking this way. So rates are at all-time lows. If you want to get in, lock in those low rates, that's great and all. But because everyone's doing that, everyone's thinking the same thing, borrowing is so cheap, it's raising up the price of real estate. So that could be a bad thing as well. So let's say if interest rates do increase, that would mean it's more expensive to borrow, less people would get into real estate, and that could drive prices down. Now, this is partly one reason why it's going to lead into the secret aspect that I'm going to tell you guys in just a few minutes. But understand there are just so many different factors that you really have to look at. But the next big one that you cannot dismiss is the real estate market and the cycle that it goes through. If you know anything about Ray Dalio and how the economy works, definitely look into that video. Hugely popular. You could simply watch that on YouTube. It's great to know. And that basically everything goes through a cycle. Everything has ups, everything has downs. The further you back up, you see the cycles. So obviously the longer time horizon that you look at, the more clearer the cycles become. So for example, we could look at a chart. This is the New York Home Price Index. So this just kind of shows you the prices in New York because I currently live in New York. So you could see this is from the late 80s, and you can see those dark lines are recessions. And there are kind of cycles. So in the 90s, it kind of started going down. Then there was the increase. Then a recession, I mean that recession in '01 actually didn't cause the real estate market to go down, it continued. But again, you could still see it continued until like '06, '07. Then the next recession caused the downtrend. Then, after the downtrend, there was an uptrend. And a lot of people are arguing that right now, obviously, there's no doubt that we are in an uptrend, but we're wondering how long this uptrend can continue. We are basically at all-time highs versus like what happened in '08. We're almost at those levels now. Now it does depend on the location that you're actually looking at. This is just New York, and I am planning on moving very soon, so a lot of things could be changing, but this is another chart that you can also look at. This is in North Carolina, a huge growing city and state basically. So you could see they dropped little less than New York, but also grew a lot too. So each market might have like higher highs and lower lows, while others are kind of more linear, you know, it goes up and down a little bit. So each market is different. You got to find out where you are. This is another quick example of another state, Colorado, and you can see how it behaved a little bit differently. You can see after 2008, it didn't go down as much, and right now it's going back up. So this is kind of more of an example of a linear market, not too high highs, not too low lows. This is generally speaking, overall, things really aren't that cheap. Now, if you do find like a fixer-upper, you could get a deal on that, so it really depends. So this is going to lead to the secret that I heard from a realtor. So I started looking around maybe like a year ago of possibly purchasing an investment property. So I know that North Carolina area was actually becoming very popular, high growth and everything like that. So I talked to a realtor. And they said they dealt with like out-of-state customers or buyers, in-state buyers, but also hedge fund managers. And that's the secret that a lot of people, definitely normal people, don't think of this. Hedge fund managers, they're billionaires, they're huge investors, and because it's so cheap to borrow, they get into real estate. Now, the realtor was explaining that they were buying a lot of things up in cash and sometimes even paying more than the asking price. So with hedge funds, this could be viewed in two different ways. One is that it's great because it's propping, you know, there's obviously a lot of sales going on. It could be propping up the real estate market, so prices are going up. On the opposite hand, if hedge funds have to sell, because they could be traders, you know, they trade stocks, they trade bonds, basically anything that makes money. So if they have to sell for whatever reason, or if they want to move that money to some other investment, they could sell real estate, which could then obviously bring more sales onto the market, which could then drop real estate prices. Again, yes, it does depend on the area that you're in. There might be more buyers like this in certain areas, like what I was just saying with North Carolina, but a lot of investors are trying to get the highest return possible. They can't get it in bonds because their yields are so low. You know, stocks might be a little bit risky or highly valued, so then they go to real estate. So if they want to sell out, that could affect real estate. Just something to think about that a normal person definitely won't understand. Now, at the very end, I would definitely have to say it really depends on your money situation. Also, your credit situation. You should have over a 700 credit score because that will get you a better rate. At the same time, if you're only able to put down 5%, that's going to mean that your payments are going to be higher. Now, if you're strategic and you're an investor and you're able to fix and flip something with lower money down, that might be able to work. However, for a normal person, if you're putting less down, that means a more payment, and that could hurt you over the long term. And then if real estate possibly gets hit, then you're actually underwater, just like in 2008 with a lot of people in real estate. Now, especially with banks possibly becoming a little bit more restrictive, especially during these times, they want a little bit less risk. So you might need a 20% down payment on real estate. So if you don't have a 20% down payment, you might not be able to either one, qualify, or two, to even afford it. So again, multiple factors, including your own factor, that you really have to make the decision on your own, especially if you have a long-term perspective, maybe if you're willing to hold on to a property if it drops, because then it could rebound in the longer term as well. It could also depend if you're maybe closer to retirement and you're in these states or locations that have really high highs. Maybe you would want to get out at this point. Maybe you want to sell at a high. Maybe rent in the short term. Understand that renting in the short term might not be a bad idea, because then you're out of the real estate market. You don't get affected by the fluctuations. So you kind of sit on the sidelines. Problem there is, good luck timing the market. You're not going to time it. But then you could also look at maybe other locations that are more affordable. Look, see if you can move. That's actually what I'm going through right now. Now, the overview here, of course, there's no right or wrong answers because we never really know. Unfortunately, I wish I could give you a more direct answer, but we could definitely look at the different factors. But one, generally, you cannot deny the fact that prices are high. We've been in an uptrend for like 10 years now, so generally it is expensive. Again, in case if you find certain deals, that could work for you. But in the meantime, if you want to see what happens maybe the next year or two, because real estate's kind of delayed, we saw in the charts that, the last recession, started in 2008, and real estate kind of bottomed around 2012. So it actually took a few years for real estate to adjust to what was going on. So understand that. So in the meantime, if you want to wait, you could work on your credit, so it builds it up, so you're more lendable, if that's the right term, and also build up cash. So you're able to actually put down the 20% needed, or maybe if prices drop far enough, you could buy it fully in cash. Another bonus tip, you could also start paying down your debt. And that also shows lenders that you have less debt, so you're a little bit more reliable. And that could also help your credit as well. And I could go on and on and on about this. I did do a recent video going over this kind of topic a little bit more in depth, talking about like the mortgage crisis and everything like that, if we're in one right now. So if you're interested, I'll leave a link in the description for you. But people might argue at the same time, with all this money printing, eventually there could be an inflation. So if there's inflation, that means basically everything goes up, including houses. So this could definitely be the case, again, depending on your financial situation personally, if you have the right funding, if you have the right credit, you're planning for the long term. It really depends on how you want to play it. For me personally, of course, you can play it how you wish. I'm going to be waiting to see how things pan out, especially since we're at all-time highs again, that we're going through this right now, and the real estate market is kind of delayed, so I want to see how things turn out. In the meantime, I'm building up a cash reserve. So let me know what you guys think. If you have any questions, comments, concerns, please leave them down below. I'd love to hear what you guys have to say. Are you buying a house this year, next year, or just renting until everything collapses and then you get back in? So let me know what you guys think. Don't forget to subscribe for more videos. I'm having a lot of updates of either the stimulus, what's going on with the market, so you could understand it, and what you should be doing during these crises. So again, thank you so much for watching, guys. Really appreciate it. And I'll see you in the next one.